Welcome back, everyone. We've talked about how the stock market can sometimes feel like a wild roller coaster. Well, today, we're going to explore a really powerful idea that can help you navigate all those ups and downs, thinking long-term.
Okay, so last time we were here, we established a super important fact. Risk is just baked into the stock market. It's part of the deal. You can't just wish it away. But what you can do is learn how to think about it differently.
And that brings us to the big question, right? If the market is always bouncing around, sometimes going completely haywire, how in the world do you handle that? How do you keep from stressing out every time you see those numbers change?
To answer that, we first need to look at what's going on day to day. We're going to call this the daily noise. You know, if you zoom in really close on the market's movements, on any single day or even hour by hour, it can look like pure chaos. This scribbled, jagged line you see here, that's exactly what it feels like. Trying to guess if it's going to go up or down in the next 5 minutes is, well, it's pretty much a guessing game. And all that frantic movement, that's the noise. But what if we just change our perspective? What happens if we step way back and look at that chaos from a distance?
This, right here, is where time becomes your best friend. We're going to zoom out with time and try to find the bigger picture.
And just look at this. It's such a great way to see it. That little scribble of chaos from before, when we zoom out, you can see it's just a tiny blip on a much longer and smoother line. All that day-to-day volatility just kind of melts into a bigger, more understandable trend. The noise starts to fade away, and a clearer pattern starts to show up.
Now, that's a cool visual, for sure. But what does it actually mean? Why has this trend, historically speaking, generally pointed upwards? I promise you, it's not magic. It's actually rooted in something very real. And the answer is pretty simple. It's because of what you're actually investing in. You're investing in businesses, and real businesses, well, they need years to grow, not days. Let's do a quick refresher on what stocks even are. When you buy a stock, you're not just buying some symbol on a screen. You are buying a tiny piece of ownership in a real, living, breathing company. Your investment gives that company capital, which is just a fancy word for money you can use to run its operations, hire people, create new things, and hopefully expand. And this is where it all clicks. Our source material puts it perfectly. As these companies put that money to work to actually grow and expand, their shares of stock can become more valuable over time. See, it's that real-world business growth that drives long-term value. And that kind of growth, well, it just doesn't happen in a day. To make this feel even more natural, let's use a few simple analogies from our own lives. Think of it this way. You don't plant a tiny seed and expect a giant oak tree the next morning, right? Of course not. It needs years of sunshine, water, and patience to grow strong roots and become something substantial. A business is a lot like that. It needs time to really establish itself and flourish. Or what about learning a new skill like playing an instrument or learning to code? You don't become a master after one lesson. It takes consistent practice and a lot of effort over months, maybe even years. Value is built gradually, step by step. And finally, this connects directly to any big goal you might have, especially a financial one. Whether you're saving for a house or planning for retirement someday, it's a marathon, not a sprint. It absolutely requires patience and a long-term view.
So you see the common thread here, right? Whether it's a tree, a skill, or a goal, the secret ingredient is time. So let's wrap this all up by focusing on the key takeaways. It's so important to see this as a mindset, a way of thinking, not some kind of ironclad guarantee.
So here's what you really need to walk away with. First, this is about patience, not trying to predict the daily noise. Second, adopting this mindset can really help you stay calm and manage those emotional reactions when you see scary headlines that the market has a bad day. And finally, and I really want to emphasize this does not remove risk or guarantee profits. The market can still have very long, difficult downturns. This is simply a framework for navigating that uncertainty. And on that note, if you're finding this whole step-by-step approach useful and things are starting to click, maybe consider subscribing to Neural Tarot to keep on learning with us without getting lost.
All right, so what's next? Where do we go from here? We're going to take this idea of managing uncertainty and build right on top of it.
In our next explainer, we're going to tackle a huge topic called diversification. We'll break down why putting all your eggs in one basket or investing in just one single thing is a whole different kind of risky. It's a really important piece of the puzzle. I'll see you there.